Welcome back. In a dramatic turn in the Indian financial market, Sebi has barred the global trading giant Jane Street from accessing the Indian securities market, citing alleged manipulation, and they're also impounding gains to the tune of 5,000 crore rupees. Prashant is now joining in with his thoughts on this entire episode. Prashant, hi, good to see you.
Good morning, Rima. Good morning, Surabhi and Mangalam as well. You know, this is big, and it's in terms of regulatory action, perhaps as big as it gets. And the primary reason for that is, for the last 2 years, if you remember, starting in the middle of 2023, we've been sort of reading, hearing about this sort of, entity called Jane Street. I mean, there are other entities in this sort of category of players in the market. There are players like Jump, Citadel, but Jane really, has been the focus of attention. If you remember, the first time these sort of articles started to appear were in the foreign press. Which I still remember that article which said that they made $1 billion in net profits that year. I think this was in 2023, and of course after that there has been a litany of press coverage on it. I remember the last sort of news item which came through was one of the Indian publications, long form publications, which said that the mysterious hand in the market, which moves market willy nilly, I mean, as they desire. So this is, in a way, the culmination of all of that, and the regulator is now stepping in. I'm sure you guys will, of course, we've been telling our viewers what has been done by Sebi in terms of asking these entities and asking banks which are holding the profits which Jane Street made not to be disbursed to Jane, not to be taken out of India. And of course, I mean, barring them from capital markets, etc. So the modalities of the order, I'm sure we've been sort of telling our viewers. What I want to do here, guys, is just tell you what Sebi has found in terms of their order, the modus operandi on the basis of which this order has been passed. So there are two sharp points. There are two sharp strategies which Sebi in its order has highlighted. Number one is, and there's been an inkling of this in the market for a while. Essentially, you take remember, the options market is much larger than the cash market, right? I mean, it's 300, 400, 500 times bigger than the cash market. On expiry days, even larger. So the inkling always has been that, this entity would move cash markets to benefit disproportionately in the options market. To give you an example, to move the cash market, you need much lesser amount of money. So, for example, you put in 5 rupees, 10 rupees to move the cash market to wherever you want it to. And this, by the way, is all happening in the same day. So in the morning, say from 9 o'clock to about 11:30 or so, in the first 2 hours of trade, you have, Jane Street moving the cash market, in the way that desired. So let me just give you a specific example. So buying 5 rupees worth in the cash market, at the same time, you're taking an opposite position in the options market. You're selling calls and you're buying puts, which essentially is nothing but going short in the market. So, cash market, you buy, the price goes up, say, for example, the bank Nifty. And by the way, bulk of this investigation which Sebi has done is all on the bank Nifty. Very little of it is based on what they found on the Nifty as a contract. So in this example, you bought a little bit in the cash market. You were able to move the cash price on the basis of which all index options on all index values are determined. So the retail, the general audience, the public, for example, at large, sees the cash price go up substantially. Sometimes 500 points, 1,000 points. We've all reported on those wild swings during the day, and they think, well, the market's going up. But this entity at the same time is actually taking an opposite position in the options market. They're selling calls, they're buying puts. And then in the second half of the day, so this has happened in the first 2 hours, 2.5 hours. And in the second half of the day, you dump the cash position. So the cash price comes down dramatically to where it was before they ramped it up. And then you unwind your calls, the calls that you've sold and the puts that you've bought. And then you profit disproportionately with a small amount of position. You're able to move the cash market. And then you're able to sort of profit disproportionately in the options market through these calls and puts. And this, by the way, is all happening on a single day. First half, ramp up the price on the cash side, sell the calls, buy the puts, and reverse all of it in the second half. So this is one. Second, very quickly, and the second strategy, the second modus operandi, if I can call it that, is even happens in an even shorter time frame. This all happens typically in the last 1.5 hours of trade. So for example, these entities go short the Nifty bank in a big way using options, etc. And then you essentially sell so for example, if this is a bank Nifty, you sell the constituents of the bank Nifty in the cash market to drive the price down of the index itself, and then you square things off. And that's how you benefit. So the second one is pretty straightforward. The first one spread through the course of the day. So these are the two sharp kind of modus operandi which Sebi has found in its order, on the basis of which they've gone ahead and if I can call it this is a cease and desist order. I've also spoken with sources in Sebi who say this is this is a kind of a cease and desist order. Investigations will continue. Bulk of what they found is on the Nifty bank. This is all bank Nifty, mostly bank Nifty, but they suspect that similar things would have happened on the Nifty as well, into which investigations will continue as we go forward. I also asked, my sources in Sebi, whether other entities, it's not just Jain, there is, for example, Jump, there is Citadel, there is Millennium, whether other entities are also, have they found these kind of things with other entities, and can we expect something like this in terms of an order? What I was told is it's Jain. I mean, by far, in terms of the size of positions, in terms of the delta that they were running on a daily basis, by far, the number two player does not even come close. So no, the answer to that question from my source in Sebi was no, this is limited to Jain. But the point is, this is for now a cease and desist order, and investigations will continue into, what other tactics, what other strategies that they've used to sort of profit unfairly, as Sebi calls it, in its order. Guys, back to you.
Prashant, thanks for that, and thanks for putting it in context. And those strategies really explain perhaps what was going on. While there's nothing, it's not against the law to take one position in the F&O market and take an opposite position in the cash market or vice versa. I think the scale at which this was being done with the intent, that is where the problem was. It's been enough to pull Prashant back. Prashant, sorry, we had to, truncate into your, make inroads into your holiday. But, Prashant, just hang on for a second, because Anuj has also joined in. It's good to get Anuj back in the studios as well on this. Given the scale and magnitude of this news, Anuj, it's a large order, and it's a big message that the regulator is sending across, right? They're saying we're impounding close to $500 million. You've done wrong. We gave you time to, wind up your shop, but it hasn't happened. But my first question to you is, will it have any market implication, because Jain has to now wind up everything?
Sebi, good morning. This is an interim order, and I'm sure that Jain Street will appeal it. And look, at the end of the day, we have to be very careful about this, and this is what Jain Street would say, that making money is not a crime, right? I mean, at the end of the day, yes, they disclose it. I'll tell you a very funny story, how this whole thing started. In April 2024, which is when we at CNBC Awaaz first picked this up, in 2024, Jain Street had a case against Millennium. They accused Millennium that Millennium poached two of their traders, and they made huge money because of that. And Jain Street said, look, we had a lot of resources on the system, which helped us make $1 billion. So that was when it first started. And next year, actually, Jain ended up making, that was in 2023. In 2024, Jain ended up making $2.3 billion from the Indian market. So $1 billion was an eye-popping number. $2.3 billion, of course, even more eye-popping. And Jain and Millennium settled their case, but it gave Sebi, a peek into what was happening. Again, this is no front-running case, so it will be very tough to prove, obviously, and I'm sure that Jain would go to SAT and then maybe even Supreme Court or whatever. But the issue here is, in a nutshell, what was happening, especially on the Bank Nifty, while the other order on Nifty and Sensex may also come. For example, on Bank Nifty, and we always say that Bank Nifty is very lopsided index. Why was this more prevalent on Bank Nifty compared to Nifty and Sensex? Because on Bank Nifty, you have two stocks, HDFC Bank and ICICI Bank, which primarily account for almost half of the index. So, you have one HDFC Bank which moves 1%. Now, you move HDFC Bank 1%. Suppose you sell a lot of HDFC Bank, but before that, you bought put options of Bank Nifty. And that HDFC Bank falls by 1%, but that put option from 100 rupees becomes 400 rupees. So that's the 4x return. And that is where obviously when HDFC Bank falls all of a sudden, some funds will come and buy HDFC Bank and the price will eventually go back to the equilibrium. And that's what was happening. Even if you look at yesterday's price move, look at what happened intraday in a lot of stocks. And that is where you will square off these positions and make huge money. So if you see the table, in index options, they made 43,289 crore, but they lost 7,680 crores in futures. Because that is where, you ended up losing the trade. The same would happen on the other way around. I mean, if you're buying call option and, you're doing that. So eventually that, in a nutshell, is what was happening. The market impact, you asked me, the market impact would be restricted to 2 or 3 stocks. Yeah. I think BSE, for example, today could be one of the biggest casualties because, a lot of volumes on BSE, I am told, were being generated by hedge funds. So in that sense, there could be some impact, though my sense is at lower level, even that will see some buying because, first of all, this is not a final order. And second of all, I think this is going to escalate. I mean, Jane Street, obviously, if you're making $2 billion, you have deep pockets. You will fight this case, and you will put if needed 500 crores in the legal fees or whatever. But you will fight this case.
No, Jane Street is one. The other thing is that now that this has been unearthed, but a lot of other hedge funds would be doing the same from here on as well. So will this really stop at some point in time? Because this is, like everyone said, this is not entirely illegal. It's just positioning that they are taking. Right?
Yeah, Mangalam, that is where, I tell you earlier what was happening was that you had daily expiries. So, so to curb that, Sebi said, okay, we will now restrict the weekly expiry to 2 days. Earlier, we had Monday to Friday, all days expiry. Now, if you see, our volatility has restricted really to Tuesday and Thursday. Yesterday, for example, there was a lot of volatility. The whole issue boils down to whether, what Jane Street was doing was illegal in nature or not. Was it market manipulation or not? At the end of the day, making money is not a crime. 90% traders were losing money, but someone was making that money, and that mostly was on the other side. I think even Samir Arora had tweeted about it earlier, long back, that, a lot of these hedge funds are making money. Why are we letting them do it? We, as in the retail traders, because, there's no way you can fight these machines. You remember Terminator, right? You can't fight that machine. That is going to just kill you. So that is what was happening. The retail trader was getting killed. The whole issue, and I keep harping on this point, the whole issue is this will escalate. I'm sure this is not the final order, and Jane Street will appeal. Whether Sebi will be able to prove that there was something illegal about what was being done.
Yeah.
At the end of the day, it just boils down to that.
From my experience, I have traded prop for about a year and a half before I joined CNBC-TV18. Obviously, that time there weren't as many volumes. But the concern that time and the concern now is the same. The depth is not as much. If you do about $1 billion worth a trade, immediately the price impact will take place.
Especially on Bank Nifty. Especially on Bank Nifty, because that was, you have a 12 stock index in which 2 stocks account for what, 50% of the index. Yep. So that is where the
that's really well put, Anuj. And let me quickly go back to Prashant for a final word on this. Prashant, really, that's what it is, the crux of it. And this could be fought out in the legal courtrooms, right? Whether taking opposing positions between the cash market and the F&O market, is it really illegal? Technically, it's not. That's what hedging is all about. But this is a different level of, algorithmic trading. Final thoughts?
No, it's going to be it's absolutely right. And Surabhi, I think we've discussed this on the show in the past as well, right? When we sort of spoke about as I said, this inkling was there. I mean, I saw this order at 5 in the morning, and I immediately said, well, because the inkling was there, well, this is what they were doing, that they would take outsized position in the options market, use a small amount to move the cash market, because, the cash market is much smaller, and then kind of sort of, reverse those trades in a very short time span. But just, guys, think about it, right? Over the last actually last year and a half, how many times have we reported on wild swings, 1,000 points, 1,500 point moves, just out of thin air, which comes, disappears, and then it's almost as if nothing happened. And I think, this order now and the modus operandi that I first explained, the two ways in which the markets were moved, explains so much, if you think about it. And of course, the legal matter, we'll leave it to the lawyers. There are securities lawyers, there are experts, there are Sebi officials, etc., who will who'll all weigh in terms of whether this is illegal, whether this is right, whether this is wrong, and whether Jane Street is liable or not. But just as as people who've reported on daily markets, hourly markets, I think what Sebi has put out in its interim order is an eye opener. And absolutely, as I said, as I began by saying, this is an interim order. I've been told very, very clearly the bulk of the focus has been on Bank Nifty. They've not really gone into what was happening in the Nifty in any great day, except I think one day on the 15th of May, I think, when they were when they found irregularities in the Nifty as well. But otherwise, this is primarily focused on the Bank Nifty. So once this order, as this order goes into effect, investigations will continue in terms of what they've done as far as the what has happened on the Nifty as well. By the way, for a lot of our viewers, Surabhi, Mangal and Rima, Jane Street would be sort of, people would wonder and scratch their heads and say, well, who is Jane Street, right? I mean, who are these guys? And I think it's an absolutely legit question to ask. And the reason why many people don't know about Jane Street, unless you've sort of, so inclined to go in, dig in, and sort of, do a deep dive on who these guys are, it's because they are so secretive. And that goes back to the point which Anuj was making earlier. The first time I think all of us heard about Jane Street was when, I think it was Bloomberg which put out that story. This is back in 2023, that, there was a fight between Millennium and Jane Street, and Jane Street was suing Millennium. It's one of the most secretive sort of trading organizations in the world. I think by far the most secretive trading organizations in the world. And for those so inclined, I'll give you, if you want to read more about their strategies, etc. And of course, Sebi has shown us some of what Jane Street has done. But I think you can, there is an excellent biography of Sam Bankman-Friedman, SBF, right? I mean, he was, of course, himself indicted by US prosecutors, etc. The book was written by Michael Lewis of Liar's Poker fame. And there is about a chapter in that book. And by the way, Sam Bankman-Friedman worked at Jane Street for a while, and there is a chapter in there, in which what Jane Street really did, and this came from Sam Bankman-Friedman in terms of what Jane Street did really came out. And I think that's one of the few publicly available strategies which were available before the SEBI order now, in which SEBI, I think, has clearly shown us at least two ways in which Jane profited, according to SEBI, unfairly, illegally, and of course, on the other side of the trade, the counterparty to the profits that they were making was Indian retail investor who were unwittingly taken to the cleaners. There's no other way to put it. Just look at the numbers which we're talking about here: tens of thousands of crores in profits by one trading shop. So I think we can go on and on. But this is a landmark order in that sense. It may be an interim order, but it's a landmark order against a global trading giant. Not the end of it. Interim investigations will continue, but I think this is pretty massive.
Yeah. Oh, indeed. And, SEBI has acted, in the past, say, against NSE, against, algo trading, etc. Yeah. But the fact that this time you've passed an interim order against, a global giant, it's unprecedented so far. Thank you very much, Prashant, for joining in, and hope you enjoy the rest of your holiday.
Yes.
Let's invite Gurmeet, Chadha, Managing Partner and CIO at Complete Circle. He's joining us on the show. We also have Prakash Diwan weighing in with his thoughts. Gurmeet, let me start with you. What would your initial takeaways be from this entire episode?
Yeah, hi, Rima. I think I agree with Prashant. It's quite a landmark order, and I think by the sheer size, I think probably I don't recall anything like this. But I think there is a line we need to draw between the technicality and the part of it being fair practice and impact on market stability and integrity. And SEBI is responsible for market stability and integrity being maintained. And if you see the order, it clearly mentions, obviously it mentions Bank Nifty incident, where on 17th of Jan. The HDFC Bank market reacted. Bank Nifty opened down post the update from the bank. And in first 7-8 minutes, you buy huge quantity in cash. And as a result, obviously the put option prices go down, and then you go short on the market, and then you obviously reverse it. And if you're doing that too frequently, and if you see the second page of the detailed order, it talks about how you create large delta positions, through very aggressive buying in a very short period of time, and then doing concurrent trades. So one is the technicality of it, one is the intent behind it, and using sheer power, sheer muscle to manipulate it. And I think the key word here is manipulation and being unfair in terms of prices. And I think to me it's just the right order. I'm sure there will be legal recourse done, and it will be a long drawn battle. But I think it's a good order, and it sends the right message that you hedge yourself, you trade, everything is fine. But there is a line you need to draw in terms of manipulating it and doing it the right way.
All right. But, just to speak from the other side on here, Gurmeet, and speaking absolutely objectively, if there is an index which has been created, which has two stocks that account for a majority of the weight on the index, I'm sure it was just a matter of time before someone would actually, try to benefit from that lopsidedness of the index, right? So in that sense, do you think from here on, now that this has happened, the Index Reconstitution Committee will perhaps look at making it a lot more fair weight?
No, I agree with you, Najdar. And, end of the day, our markets, the way volumes have picked up post-COVID, I mean, we've added, 7-8 crore new investors post-COVID. And any market which adds, such kind of investors on COVID, obviously it will take time for the markets to get, the indices to get efficient. But I agree with you, the index constitution needs to be looked at. The frequent changes which we keep making to the index, which is free float market cap for one index and others, also needs to be looked at, because what we are also doing is, apart from this, is also making optically index look so expensive. If you keep shunning out stocks and keep getting new entrants basis the sharp price movement, I think some balance also needs to be done, and some thinking has to be done there as well. But I think as a regulator, if my investors are being manipulated into something, I need to act. And I think to me, that's a fair thing to do. Changes in indices, constituents of indices, obviously this is an ongoing process, and even indices need to look. I think they've made this as a gambling casino machine. So many changes in expiry, every day some expiry. I mean, obviously creates so much confusion in the market. And look at yesterday's close, for example. Every day you see index moving 100, 200 points in a matter of 10 minutes for no obvious triggers and reasons. And this is not good for the market, in a market where, we are talking of new retail investors coming in. So I think it's a good order, and I think more needs to be done. This is just probably a starting point.
All right, yeah, we haven't heard the last of this story for sure. Promises to be, perhaps a long, drawn-out legal battle. Prakash, hi, morning. What a busy morning it's become, thanks to this big order. Your thoughts? I mean, in the interim, in the near and here and now, as Jane winds up its positions like it's been told to do, I don't know. I mean, if it impacts other large algo trading firms, what's your sense? On just the trading side, the volume side of the market, would you expect any impact?
I think definitely. The restraint on the volumes and the methodology of trades done by Jane Street was supposed to be curbed much earlier. And the order actually talks about penalizing them for not having heeded that caution. Which means that there will be a shrinkage in volume, and a lot of the others, names that don't probably feature in the interim order, but will probably be part of the full investigation, whether it's Citadel, Millennium, a lot of, domestic outfits, whatever, having set up, will participate, will have to kind of, get covered. See, what it does is it draws a very clear distinction between speculative activity, which is to the ill effect of other traders or the overall market sentiment. The restriction is primarily been brought in on, has been crystallized because we have futures on indices, which is not the case in a lot of mature markets, including the US. You will notice that you have single stock futures, probably with a 1-year dated maturity, but not index futures. And that's precisely where, the trading in India has been a bit lopsided. There will be a lot of UN cry about FI saying it's not a fair, environment, and, you can't kind of be doing these things. You have to open up the market instead of restricting it. But the element, the segment of FIs possibly which gets impacted if there is a curb on this kind of activity on options particularly is very small. So, there will be a lot of noise, much more disproportionately higher than what actually the impact is. So this will cleanse the system. They will cleanse the system, make sure that capital destruction that was happening rampantly for small investors stops, which is good. But it will impact some of the capital market infra plays, right? We've seen how in the last 18 months they've done so well, whether it's exchanges, brokerages, a lot of those elements. So there will be an impact on that. But I don't think the overall market gets bullied by this. It'll probably be much, much healthier. And the regulator has made it very clear that they will not be sitting down just because somebody is kind of out there with much more money to be traded into these options.
Take that point entirely, Prakash. Thank you so much for joining in. The impact of this could be limited as of now, as per Prakash, to just the capital market plays on account of this. Gurmeet says that we haven't heard the last of it yet. It'll be very interesting to see where this goes from here on. Thanks a lot, gentlemen, for joining in. Just a closing word on this, Surbhi. When the futures market was created world over, it was on three basic tenets. The three things that futures market was created on. The first part of that was hedging oneself. The second part was arbitrage. And the third part was speculation. So speculation is part of the futures design by itself. So let's see where this goes from here on. So we'll most definitely keep an eye out on how this story develops. But for now,